Hello and welcome to Money Matters TV. I'm Mike Dever, the founder and CEO of Brandywine Asset Management. And my co-host today is Jim Butler, CFP and Managing Director of Marcum Wealth. Hello, Jim.
Good to see you.
Well, we've had some interesting times over the last month or so, certainly since the Trump inauguration. A lot of panic. Then one of the biggest market rallies in history, followed by just a kind of a quieting out period here. But stocks have been all over the place. We're talking about the first economic contraction in the first quarter of 2025. What's it all mean to you, and what are you telling your clients?
Well, one theme that comes up when the market moves like it has recently, as you pointed out, is that to many investors, it feels like, this time it's different. And because the headlines and storylines are always different. But I would contend that, in fact, it's just the opposite, which is this time it's not different. The headlines, of course, are unique to where we are today. But in the long term, for a long-term growth investor, in fact, now's the time to buckle up and focus on long-term objectives and kind of stay the course. So it's not uncommon that we'll bring up some of those long-term numbers just as a refresh. And using the S&P 500, Mike, as we do in the business, as a reference point, it takes a dip of about 20% or more, also known as a bear market, when it hits that 20% threshold, about every 5 years or so. And that intra-year, every 12 months, it does dip in the 14 to 15% range. It doesn't mean the market goes down by that from January through December. But if we look at the past 25 years or so, there have been, now roughly 4 bear markets. And we could even include the first part of this year so far as one of those bear markets. The S&P has dipped kind of into the 20% range, really from February through April.
It did that on an intraday basis, I know, and then popped right back out of there, right when
That's right.
we had the reprieve on the tariffs for a bit. Yeah.
So real quick, I'll just touch on these as a refresh. Yeah. In 22, the market sold off a full 24%. It didn't close down 24% for the full year, but it was off 24% from trough to peak, or peak to trough. Alternatively, in COVID, in February to March of 2020, the market sold off 34%, actually in 33 days. So talking about a roller coaster ride.
That was, Jim, that was one of those times when there was just sheer panic across the board, and a lot of people just totally mistimed that, because I talked to investors during that period when it started selling off. They were saying, no, it's a buying opportunity. I'm gonna buy, because everybody's been kind of conditioned over the last 20, 30, 40 years to buy the dips. They started doing that, but then within a week or two, it was capitulation. And some of those same investors were then just coughing up their positions, getting out of the market, and entirely in some cases, just in time for that to be one of the steepest V bottoms we've had in history. Market turned around like crazy on that. And it just obviously it might not have been that way, but when the government started infusing trillions of dollars in cash into the economy, there was almost no other direction for things to go except up at that point in time. So now we're in kind of this situation again, where there was just sheer panic just a month ago. We're hitting these new lows.
And early enough in the year, Mike, where we don't know what the rest of this year is going to look like. Obviously, what's grabbing headlines is, for the most part, the tariff story, inflation, unemployment, and other considerations. But when you look at another measure of market volatility, is commonly referred to as the VIX index or volatility index. When it goes above 25, that tends to foretell a certain amount of above average volatility. But over the past since really 1990, so call it roughly 35 years or so, the VIX has really reached a range of 45 20 times, and all 20 times were in those bear markets, 2000, 2008, and then during COVID. But then until recently, when it did hit 45, so that was back in April. Something that is really fascinating. Once that indicator, the VIX, peaks and starts coming down, the 12 months following that, in every case of those 20 times, the market has averaged a return of 39%. So that's the 12 months following when the VIX peaks. So kind of going back to your comment about the V-shaped recovery back in COVID, who knows what this year is going to be? Nobody knows that. But when it rebounds, the market tends to really take off like a rocket.
Right. Yeah. The VIX, also known as the fear index, right? So it's when it's peaking like that, you're talking about peak fear at the same time, and by be greedy when others are fearful, and fearful when others are greedy, right? So
Yeah.
That's what you're saying here, and it applies in this case. Just statistically, you would expect that the market would recover and be higher. It's up, say, 10% now from that peak reading, and you're saying it's got, on average, based on what you've seen historically, another 20% to go.
Incredible.
Yeah.
It's amazing. And then, of course, we don't need to look too far or too long in the rearview mirror.
This is from Jack Delman in Philadelphia. What are 2 safe retirement income strategies?
So, Jack, I'll try to keep this simple, and I think it does highlight, I think, some key options, and I'm going to kind of liken it to Olympic standards. So, kind of a bronze option, if you want to call it that, on the very safe side, would be to invest money to make it look like a pension, which is a fixed payout or a regular payout over your lifetime. And the easiest way for most people to do that don't have a pension is through an annuity. You can put money into an annuity and immediately annuitize it, and basically it turns into a pension. And that pays out over, obviously, a single lifetime, or it could be a joint lifetime. So that's on one end of the spectrum. In the middle would be what I'm going to call the silver option, and that could be a combination of say bonds, which has fixed income, including money markets, and there you're getting decent yield, and you can pull money off from that. And then the other 50% could be invested in conservative equity or growth investments, and that gives you an element of growth. However, on the gold standard, kind of tying in the long-term issue that Mike and I talked about, your best bet over time is to go into a dividend income strategy. Dividend income, by definition, is basically an all growth portfolio. It can either be dividend growth, which can yield in the 2 to 3% range, or it can be high yield dividend, which can be, say, 3% or more. The biggest benefit you get there, however, is the growth of equities over time, which have always outpaced inflation, much more so than fixed income instruments. So there you have, all the way from, say, the bronze, annuitize money, make it look like a pension. Silver would be a combination of stocks and bonds. And then on the other end, the gold standard would really be a dividend income strategy.
I think that's a great answer, Jim, because one size does not fit all. And the one thing I see with a lot of people that are talking about income and retirement is they're forgetting about inflation, and that's such a key component. And the gold standard strategy you have does account for that, and those dividends should increase as we have inflation and the corporate value increases, and then the corporate profits increase, where you don't necessarily get that in the other two options. Yeah, thank you. So here's how you can send your questions in to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Okay, thank you. And now we're going to bring in our extra special guest today, who happens to be my son, Matthew Dever. Hello, Matthew.
Hello, great to be on.
Yeah,
Hi,
it's great having you on the show. Now, I'll give a quick introduction. Matt was at Penn State. I'm not going to get into everything prior to that. Ended up as a portfolio manager on the Nittany line, which is a student-run investment fund. Had internship at Citigroup, was hired there, worked there up until COVID, the depths of COVID, and moved to Austin with a partner. They set up a business called Scrimmage. That was probably the fourth iteration of it. They learned how to pivot. They've got something new going on now as well. So there's a lot of entrepreneurial interest in what you can tell us today. Where do you want to start? After Penn State into the entrepreneurial stage?
Well, I got my start in the public equity and bond markets. I know that's relevant to viewers on your show here. However, it doesn't have much impact over my life anymore, other than the trickle-down effects to venture capital, whether or not to bootstrap or try to raise VC money. We ended up raising venture capital money for our first venture, Scrimmage, which helped get it off the ground. However, with the new venture, I think we're going to go the bootstrap route. Venture capital purse strings are a bit tighter than they used to be. They expect to see a little bit more in terms of growth, in terms of revenue, before willing to invest in a company in the early stages. But for myself, I started Scrimmage back in 2020. I was working at Citigroup at the time, speculating on the bond markets in Latin America mostly. And no, I don't speak any Spanish. I had some help there. But Scrimmage started off as a sports betting consumer app where we would help sports bettors manage their portfolios. It evolved over time into something entirely different, as you mentioned, Mike. Our fourth iteration of these things. Startups can be quite speculative. If you are going to invest in them, they might change dramatically from the initial investment period. And what we are now is we are a loyalty program provider for other consumer apps. So if you're a company and you want to add an point system, challenges for your users, a daily bonus, and things like that, redemption options, you can build it yourself. It might take you a year as a company, or you can subscribe to Scrimmage, and we charge on a monthly basis based on the amount of users that company has. And we are still in the early stages of that. We have a handful of clients, and we'll see where it goes.
So, Matt, when you say help folks within Scrimmage to manage their fund or their portfolio, expand on that a little bit. What do you mean help them to manage that? Absolutely.
So back when Scrimmage was an iteration of the sports betting ecosystem, we viewed sports betting as an investment opportunity itself. It can provide returns if you have an edge, much like any investment can, in stocks, bonds, wherever else. Actually, the first iteration of the company I started was a sports betting hedge fund, but that is a whole separate story. So other people in the world viewed their sports betting as a type of portfolio as well. Now, you have 99% of people just go on and they place a bet on the Marlins, on DraftKings, and you're just watching the game. but that 1% takes it very, very seriously. They have a bunch of sports betting accounts. They are trying to measure the profit loss of every trade, their EV, expected value on these trades. And we had an app that allowed them to manage all of that seamlessly and calculate their profits.
Yeah, what they did, Jim, and because I was watching this as it was developing, is they did start out with their own sports betting hedge fund, but they realized pretty early on that there were capacity limitations. This was not going to be $1 billion hedge fund, maybe a $10 million hedge fund, and they had great numbers on it. It was performing, phenomenally well, but they had to run that fund, developed a lot of technology to be able to place the bets, automate the selection process of what bets to place, track the performances, and that's when they started looking at it, going, okay, we could sell the picks and the shovels to the miners rather than be the miners ourselves, and maybe that's a bigger market. So that was the second iteration, I guess, from the hedge fund to that for Scrimmage. From there, they continued to learn, I guess, more and see more opportunities within the sports betting space, which expanded further. Maybe Matthew, you can tell us a little more. How did you go from picks and shovels to loyalty programs?
Well,
and why?
Money, it matters. Always follow the opportunity. And we saw an opportunity when we built a loyalty program in our app itself. And it quickly became the only thing our users talked about, more than the ability to manage all of their betting portfolios and everything that came along with that. They came on and they loved the loyalty program. We gave them points for the amount of bets that they placed and other bells and whistles. And we had friends in the betting space that asked for our product. And we decided to spend a year to repurpose the technology, make it B2B, and became a full SaaS business instead of a consumer app based on that. And now about half of our clients are other sports betting products.
So Scrimmage is all based on sports betting.
That's where it got us started. We've slowly started to evolve to other clients as well. We figured out that what works for sports betting works for other businesses, even trading apps, actually. You can gamify the process of placing a bet. You can gamify the process of placing a trade as well.
Yeah, the whole idea is to generate loyalty and encourage behaviors, and so by gamifying the process, people get points. I guess you can go up to different status levels or whatever in that behavior, based on how the game is structured. It can be customized for each company. They can create their own structured games, I guess. Is that correct?
That's correct. Yeah, and it comes back to just base human psychology. If you add an incentive for doing something, your users will do it. And we've seen success not just in the betting space, but other avenues as well. People are people, and they're fairly consistent across products.
So, Matt, your revenue stream is based on subscriptions. Is that fair?
We charge a monthly fee from the company, and that depends on how many users they have on our product. Exactly. It's anywhere between around 10 cents per user to around 25, depending on how many users they give us.
And what time period does that cover? So is that like a weekly, monthly, or
that'll be that'll be a monthly fee, exactly. And I mean, what we try to do is we try to retain their users. We try to get them to use the company's product more, that subscribe to us. So we like to align incentives. That's why our revenue structure is based on the amount of users on our product, because at the end of the day, it's up to us to increase that number on behalf of the client. So the better job we do, the more we get paid.
So is your customer the end user, or is it?
It is the business itself that has the betting app or the trading app. That is the company that will end up paying us at the end of the day on behalf of their users.
So Matthew, because it's a brief show and you have a lot of different things that are of interest, but to me, what's interesting is just the process of how you pivoted from the one business to the other, and ended up in the loyalty program. you also have another business that I recall it. I think it was Thanksgiving. You sort of threw something out there. You're living in Washington, D.C. with our youngest son, Charlie. And you threw something out there about trying to get people together to participate in some event. That's led to something bigger. Not planned, but now you see it and you're running with it. Tell us a little bit of what that is and how that got its start and where you're at with that right now.
We are at this beautiful location, a beautiful farm, and this is going to be an 8-mile cross-country run.
We have people from all over the world here, all over the country. There is no way to truly train for this. How do you train for Assassin, Labyrinth, Deception, one-on-ones?
Right.
It's really going to show people's versatility.
Well, I'm a bit of a restless soul. I take a shotgun approach to starting businesses. I think that's probably the best way to go because you don't know what's going to work or what isn't. So just keep shooting. And this might have been the 10th company at this point, but this new venture it really did not start off with the intent of becoming a company. It was supposed to be an event with about 20 people. And to give a quick background on what the event is, it's called the Hunter Exam, and the company behind it is the Hunters Association, and it's based around a very popular anime show, actually, where one of the seasons of the show, participants compete in the Hunter Exam for what is the end prize of becoming a professional hunter. And we thought that it was going to be a small group in Washington, D.C. I was going to sit back in a lawn chair and tell people to run faster. Next thing I know, we have 1,000 people that have bought tickets to this event, and we had to put everything together. We hired a full event team. We had about 100 staff on site, and we put on a really successful event in March and yielded about $100,000 in revenue based on that. We spent a little bit more than that, so we are planning on throwing another event, and now that we've figured out what we're doing, we'll be able to bring costs down. We'll be able to sell more tickets. But I think it comes back to if you see something work, you run with it. That's always been how I try to do things. I didn't expect this to be a business, but now that it is and people like it, I'm going to run with it. And that's what we're doing.
So Matt, help me to understand somebody who doesn't get involved in the Hunter Exam.
Mm-hmm.
If I did sign up and I participated, why am I signing up? And what's the experience? Why am I there?
I've actually asked that myself because I'm not the type of guy that would show up to a Spartan event. But I am the type of guy that would show up to this event. And the main difference is this is a true competition style event. And what's really unique is we eliminate people at every phase of the event. And it's not just physical, it's a combination of physical challenges as well as mental challenges. To give you an understanding of that a bit more clearly, the first phase we subject people to, or at least in the March exam, was an 8-mile cross-country run. And that was just phase one. Phase two, we had them play a game where they had to steal a target's flag. Everyone had flag football flags along their waist, and they had to go and track down their target and steal those flags.
Jim, it was chaotic. It was it's as fun to watch as it is to participate. And a lot of the people, so in the first part of the first phase of the run, they eliminate maybe 30-40% of the people from that. A lot of those people still stick around for the other phases just to watch them. And they live stream the entire thing as well.
So where did this take place, for example? I don't need an address, but I'm just curious.
This took place about an hour outside of Washington, D.C. at a horse and an equestrian facility. It was a beautiful place. It was 80 degrees on the day. We couldn't have gotten luckier. It was rolling green hills in Virginia, and it was spectacular. We had people flying from all over the world, France, Japan, Brazil, all over the United States, of course. And I think they are not the type of people that would have gone to a traditional event, but they're fans of the show, and they love the new competition type of event that this was.
The facility, Jim, is where the Virginia Gold Cup. It's the largest East Coast horse steeplechase. Is run there annually each year. So it's just spectacular grounds. And Yeah, we met people from all over the world. I mean, it's crazy, the people that turned up to participate in this. Because what do they win in the end, Matthew?
Almost nothing. They win a physical license. I will say it's a beautifully designed license. It is about a millimeter thick of metal, and they get access to a professional hunter's portal. In the end, 9 people won this title, and I will say, more than the physical or virtual aspects of it, I think the social aspect is really what these people got out of it. These 9 people are now best friends. I think they'd agree to that themselves. They have a group chat. They talk amongst themselves. They go out for drinks.
They're also celebrities.
I was going to say they are celebrities. Yeah. We've had them. They like to tell us when this happens, but go get a Chipotle burrito, and the person at the counter goes, "Are you the guy that won the hunter exam?" Right? And it's shocking. And it's because it's not just in the community. I think it's starting to spread as well. We've actually incorporated these 9 pro hunters into the next phase already. Phase 3 of the next exam. Phase 3 of the next exam. The participants get to now track down these hunters. We have access to 60 acres of woodland and a farm outside of New York, and we're going to let people run around there and try to find these professional hunters.
So, Matt, we're winding down in time. I'm going to ask you a big question, so your answer has to be short. How, if at all, would AI impact your next iteration?
AI in the hunter exam is honestly, it's kind of the juxtaposition to AI. I would say that it comes back to just real tangible events. But if I was to start a new software company, I think that the SaaS industry is in trouble if it's not fully focused on AI. I think companies with AI developers at their backs can do a lot of what software subscription and SaaS providers do right now. And I think that you can develop an entire company by yourself with little programming experience and the help of AI in a month. And we've already done that. My brother, Charlie, is a fantastic developer, but with the help of AI, it's not an understatement to say that he might be 50 times the programmer he was before. And what does that mean? It means he can develop an entire product in 3 weeks, and we've done it.
Yeah, it's all about, I think in summary here, is moving fast, but recognizing the opportunities, pivoting when you see it, taking advantage of it. What they realized with the Hunters Association is that there was demand. The hardest thing with any business is usually sales and getting out there and trying to build a business from it. This came to them. So it was all about execution. And now they're in the phase where they're expanding that, running out different events as well. It's a lot of work, but I think your last question, Jim, with AI, it makes so much sense. It makes it so much easier for them all to accomplish multiple tasks at one time, which is great. But thank you very much, Matthew. Thank you, Jim.
Absolutely.
Okay. Our next guest on Money Matters TV it's Rick Neiman of Patriot Insurance Services. So thank you very much for joining us at Money Matters TV, where your money matters. See you next time.